Here we are in the QBO gym, and this is where we have numerous hands-on exercises that simulate real-life scenarios that you may encounter as a bookkeeper. Each month covers a variety of new topics and scenarios, and to make it a little bit easier for you, we break it down into 4 different sections. So if you are looking to work on your bookkeeping skills, this is the place for you. And if you want to do an entire month's worth of these all on your own, be sure to join our free 5-day bookkeeping challenge. All you need to do is click on the link in the description. But let's go ahead and get into today's exercise, which is being pulled from our October Year 1 cardio section. At the top here is an animated video to give you a synopsis of what is going on in Craig's world this month. He is our fictitious business owner. Further down is an interactive pre-assessment quiz that relates to the video up above. Below that are the exercises in this section. And at the bottom here is an optional area where after you have gone through all of the exercises in this section and completed them, you will unlock some sample marketing posts that you can use on your LinkedIn to share with everyone what you have learned so far. So let's dive into today's exercise, where we are going to practice adjusting inventory. Go ahead and click on that link to have the exercise come up for you. I have it here on the right side of my screen, so let's read through the scenario. Craig was cleaning out the warehouse this morning and realized that some products were damaged. He thinks that an employee may have accidentally damaged some of these items while operating the forklift in the warehouse. Craig assessed all of the damaged items and determined that 1 sprinkler pipe and 4 fountain pumps are not salvageable, and 1 rock fountain has some damage but could be sold at a discount or even donated. So here's how we would record these. Now, you will need to be in the same session of the sample company that you did the previous exercise in. If you have not completed that one yet, go ahead and click on the link on the top right corner of your screen. That'll take you to that one, complete that, and then come back to this one. They're all building on each other, so be sure to start with that first one. I have the sample company here on the left side of my screen. This is the last page that I left off of from the previous exercise. So let's go ahead and get started with this exercise. When you discover damaged products in your inventory, it's essential to adjust the inventory count and value to accurately reflect the state of your stock. Start with the items that were damaged beyond repair. Now, since these items will no longer be counted as inventory, you'll need to adjust the quantity of items on hand. So to do that, we're going to click on the plus new button and then click on inventory quantity adjustment. So the plus new button is on the top left corner of your screen. Click on that. And then in the other column is inventory quantity adjustment. Go ahead and select that. Now, in the inventory adjustment account field, we want to select inventory shrinkage. This tracks the value of the items that were damaged. For me, I already have it here, so I'm going to just leave it as is. As a note here, this adjustment date is going to default to today. Go ahead and leave it as is. Of course, in real life, whenever this is actually happening, when you're making the quantity adjustment, if it's any date other than today's date, be sure to make that change. All right, so on the first line in the product field, select sprinkler pipes. So go ahead and click into it. You can either start scrolling. It looks like it's the 4th one that's listed here. So go ahead and click on that. And then in the change in quantity field, we're going to type -1. Now, if you are reducing the count due to damage, this will be a negative number. Notice that when you tab out of this, the new quantity will automatically be adjusted. So currently on hand, there are 31. So let's change that change in quantity to a -1, hit the tab key over, and you will see the new quantity has now been adjusted. So on the second line in the product field, we're going to select fountain pumps. So go ahead and click into it. You can click the down arrow. Fountain pump happens to be the top one here. Go ahead and click on that. And 4 of those were damaged and unable to be salvaged. So we want to click on into that change in quantity field, type a -4, hit the tab key over, and you will see the new quantity is now showing as 21. Now, the memo field is not required, but you can use it to provide details about the adjustment that you may want to make note of, such as damaged goods discovered when warehouse cleaning. So it's not an actual part of the step here that we have to do, but let's go ahead and just copy that text, put it here in the memo. Just so we have it, again, this is an internal note for yourself. So if you're ever going back and looking at this in the future, being able to see what this was for and why this adjustment was made, it's always good to have that note there. So let's go ahead and click on the green Save and Close button. We have now adjusted the inventory for those non-salvageable items. So Craig decided not to donate the rock fountain. Instead, he will try to sell it at a discount to recoup some of the cost. Unfortunately, it's been on hand in the warehouse for too long, so the supplier wasn't willing to work with Craig on an exchange. Craig came up with a creative idea to use it as a conversation opener for clients he hadn't heard from in a while. He focused on clients that had been out of touch for at least 3 months. After only a few phone calls, he found a buyer. Whitney from Wedding Planning by Whitney came to the office to look at it, and she believes she can repair it herself well enough with some plaster that she can use the fountain for staging wedding scenes, especially at a 45% discount. So here's how we're going to record it. If there were several items that had been damaged and were going to be sold at a discount, the correct procedure would be to remove them all from the inventory and record them as obsolescence in an obsolescence account rather than shrinkage. Then you would need to add them back in at a new, lesser value and create a new product just for selling these damaged items. That's quite a bit of work for just one damaged product, however. So for this exercise, you're just going to sell it to Whitney at a reduced price. So we're going to click on that plus new button and then select sales receipt. So the plus new button on the top left corner, click on that. Under customers, you're going to select sales receipt. And then once it comes up, let's go ahead and fill it out. In the customer field, we're going to select Wedding Planning by Whitney. So click into that. She's going to be all the way at the very bottom here. So you can either type it or scroll to get her name. Once you do, her information is going to pop up here. We are going to leave all of this as is, including the sales receipt date. It's going to default to today. Of course, in real life, make sure that it is matching the date of the actual sale. In the payment method field, we're going to select MasterCard since that's how she paid. So I need to scroll down so you can actually see it. Here's MasterCard. Go ahead and click on it. And then in the deposit to field, you're going to select checking. In the product service field, let's go ahead and select Rock Fountain. So click into it, and it is the fourth one on this list. Go ahead and click on it once you find it. In the description field, let's give it a little more description about why this is going to be at a discount. So let's go ahead and put 45% discount for damage. So delete what is currently there and then type 45% discount for damage. We're going to leave the quantity and rate as is. And then in the message displayed on the sales receipt, we're going to type 45% discount for damage as is, no warranty, not eligible for return or exchange. So to make it a little bit easier, I'm just going to highlight over all of this. I'm going to copy it, and then on this box right here where it says message displayed on sales receipt, delete what is currently there, and then go ahead and add in this information. Craig wants to make sure that he remembers why this was discounted and has his own record that Whitney was notified that she can't bring it back if she isn't able to repair it herself. So in the discount percent box, we're going to type 45. Now notice that you are entering a whole number here, not a decimal. So click into that box, go ahead and type 45. When you hit the tab key over, you will see that QBO automatically is making the calculation of a 45% discount of this $275. We're going to go ahead and click on Save, which is the black button right down here. Then clicking on the black Save button allows you to stay in the transaction itself. So let's see what QBO did under the hood when we applied the discount. So on the black bar, we're going to, at the bottom, we're going to click on More and then select Transaction Journal. So More is down here on the bottom in the middle. Go ahead and click on that and then select Transaction Journal. And you may, when it comes up, you may have to close a pop-up and refresh the report here to make the report show. So let's see what happens here. So mine is not showing. So let's go ahead and just refresh the screen and see what happens. Hopefully it'll show up at that point. And you may not have to actually do this in client books. This may just be something that has to do with the sample company. So the page didn't refresh. Let's go ahead and refresh the report rather than doing that. There we go. That's what I should have done in the first place. All right, so now that we have refreshed the report here, as you can see, QBO added the discount to the account discount given, which is down here. This is the same account that was connected to the discount product you created for Video Games by Dan earlier in the previous exercise. By tracking discounts in this account, Craig can see on the balance sheet how much of his business he has quote unquote given away. Think about that carefully, though. In the case of Whitney, he hasn't actually given away anything. He sold her a product that was damaged and just worth less. This is why our solution today is really only a good option if it happens once in a while. If Craig were frequently selling damaged or expired products at a discount, you would want to track this more precisely, as we mentioned at the beginning of the exercise. But that is it. That is how you would adjust inventory. Now, if you like this exercise and you'd like to do more like it, be sure to join our free 5-day bookkeeping challenge. All you need to do is click on the link in the description. We're going to continue on in the cardio section, and if you want to join, be sure to leave this session of the sample company open, as you will need it for the next exercise where we update recurring transactions. And I will see you in the next video.